Welcome to all of you to this session. Okay, this session is specifically for discussing the new syllabus paper which was there in December 2020 exam for tax. Correct? I am so happy that you are eager to know about it, as eager as I am to discuss about it. Okay, so I was drafting solutions for it. It was a very, what you can say, pleasurable task to draft solutions on it. So I thought, why not make a video on it? Why not discuss it with you live, this particular paper? Correct? So shall we go into it, into the discussion? Yes, those who are watching me live, am I properly audible, visible to all of you? Please let me know. I can see many of enthusiastic students here. Yes, some of you already have given the paper, and some of you have upcoming exam in June 21 and December 21. So yes, hello Nikhil, and hello, I can see Rutuja as well. Correct. So please quickly let me know, am I properly audible, visible, so that we can go ahead with discussion. So see, this is the question paper which one of the student sent me, and this is a solution which I have drafted for the same. Correct? Let's go ahead with discussion. You have not yet told me whether I am properly audible, visible. So you tell me that should I start, and then we will go ahead for discussing this. Hello sir, you are properly audible. Okay, let's start discussion then. First question. Okay, so of course you'll understand the pattern of this discussion series, how it is going to happen. As far as possible, we will try to cover all 100 marks in this one session itself. Okay, see, first question was very simple. It was a straightforward question on allowability of input tax credit, or eligibility, you can say, of input tax credit. Okay, so if you had knowledge of 17 subsection 5, that is blocked credit, then it was very straightforward to answer this question. Okay, they had said that the GST figures were given to you, and they had said that all conditions which were necessary for availing ITC have been complied with and fulfilled, and the registered person that is PQR Limited is not eligible for any threshold exemption. In short, wherever ITC is not blocked, then he can go and claim ITC. Okay, so let's check. First point, goods used in construction of an additional floor of office building at Jaipur. You know, here ITC is blocked with respect to any goods or services which are used in construction of an immovable property. So no ITC there. Packing material used in factory. Yes, you can claim ITC for packing material used in factory, because it is used in course or furtherance of business. Okay, then goods destroyed in flood waters due to natural calamities. Okay, we are saying goods destroyed in flood waters. So any goods damaged, destroyed, lost, ITC is blocked. So no ITC. And finally, papers purchased for computer printing and for photocopying machine used in admin office. Yes, ITC is admissible. Same reason, used in course or furtherance of business. And inputs used for tests or for quality control check. Okay, ITC is of course again admissible. So just taking you through the solution, check. Solution should have been like this, with notes I have given you, of course. Check, not taken. Packing material taken. Natural goods lost due to natural calamities. ITC is not taken, and again next two items ITC is taken. So your answer should have been 23,350 along with the following notes. Is it clear to all of you? Can I go to next question? So very straightforward question. All of you would have been able to solve it. I am quite sure about that. Okay. Going to next question. Okay. See this. Interesting question. It was, I would say, from industry specific analysis. It was a question about which all services are exempted for bank. Okay. So see, the question goes like this. Romeo Small Finance Bank Limited is engaged in providing financial related services and of various type of loan facilities to its constituents. It furnishes following information related to various services provided and gross amount received during month of December 2019. Okay. What they have said here below is gross amount does not include amount of GST. So you have to just say whether particular service is exempt or it is taxable. Okay, if it is exempt, then of course value take as nil. If it is taxable, consider that value. Okay. So understand, commission received for debt collection service. What basic knowledge you had was the interest which is charged on the loans. Okay, that is exempt. Correct, that basic knowledge you had. Rest other things are taxable. Of course, there was one critical point here. I will tell you that point as well. Okay, so commission received for debt collection service, it will be taxable. Okay, because there is a consideration received for the debt collection service, it has to be taxed. Okay, check the note for it. Charges collected in course of transfer or assignment of a debt, it will be chargeable to GST, being in nature of consideration for supply of services. So straightforward, it is taxable. Discount earned on bills discounted, you know that it is just like interest, so it is exempted. See, it is exempted. It is exempted as per entry number 27. Check what it says. Entry 27 of course notification number 12 by 2017, you know, exemption notification for services. So as per entry number 27 of notification 12 by 2017, inter alia, that is amongst many things, what is exempted? Services by way of extending deposits, loans or advances, in so far as consideration is represented by way of interest or discount. Okay, other than interest involved in credit card services is exempt from GST. Accordingly, discount on bills discounted shall be exempt. Is it clear to all of you? Then next was critical point. Penal interest recovered from customers for delay in payment of loan, okay, or EMIs or dues. So what will happen with respect to third point? So there was a circular also regarding this by Central Board of Indirect Taxes and Customs, which said that there are two possibilities. Okay, when this particular, what you can say, EMI facility is given by the shop, when that EMI facility is given by the shop, okay, and they are charging this penal interest, then that will be included in the value and chargeable to GST. Okay, keep in mind. But when this particular facility of loan is given by bank, then it is not chargeable to GST. So what you can do is, in the note 2 second paragraph, you can read for that. Further, penal interest recovered from customers for delay in payment of loan EMI dues shall also be exempt. Why it shall be exempt? Because it satisfies definition of interest as contained in entry number 27. Okay, the said interest therefore cannot be treated as consideration for liquidated damages. Okay, then next one, commission received for service rendered to government for collection of taxes. So there is no exemption for such service given to government, so it will be fully chargeable to GST. Then interest earned on reverse repo transaction, yes, this will fall under exemption because finally it is nothing but a deposit and interest on that deposit. Okay, so it will be exempt. I have given you its explanation in the third paragraph to this note number 2. That is, interest on instruments like repos and reverse repos shall also fall within ambit of entry number 27. Okay, as finally these all transactions are in the what you can say nature of loan. Okay, then services to merchants accepting credit or debit card payments using point of sale machine of bank. Okay, so now in this case it is said that where the payment does not exceed 2000, okay, in a transaction, then that is an exempt supply. Where the payment exceeds 2000, that means it will become taxable. Check. It is said that in 30% cases amount per transaction was up to 1800. Very good. So for 30% transaction there will be no GST. Balance 70% transaction the payment was exceeding 2000. So check total value. Total value was 20 lakhs. Take 70% of 20 lakhs, that will be chargeable to GST. Check 14 lakhs we have put up here. The total value of taxable supply would have been 29 lakhs and that was exclusive of GST. So charge separate GST of 18% on that. So value would have been 5 lakh 20, value nahi, the GST would have been 5 lakh 22,000. Okay, I am sure that it was not so straightforward question. Okay, so you might have made 1-2 mistakes here and there. Okay, don't worry, you will be evaluated stepwise. For sure you will be evaluated stepwise, so don't be much bothered about that. And if you are yet to give exam, that is your exam is in June or December 21, be aware they are putting much emphasis on industry specific analysis. Okay, so we had done that in the batch, but of course every entry was not covered. Obviously there are 86 entries. So now looking at the weightage that institute is specifically giving, and maybe some of the things are not there in ICSI module also. So of course what we have decided is for June 21 exams and December 21 exams, we will specifically cover this from chartered accountancy final module. Okay, so it will be done in much depth. Thank you so much. They have to be, yes. Thank you, thank you. Now see the C part. Yes, we should be updated, and whatever institute expects, we should take our tax law knowledge to that level. Okay, always I believe that. See, tax is a vast ocean. To what extent depth is required, only ICSI can determine that. Correct? The respective institute for that matter. In our case, ICSI. C part. Examine, this was simple question. Okay, so that's what institute had done, balancing. One tough, one simple. This, in my opinion, was a straightforward question. Examine correctness or otherwise of following statements in accordance with provisions of GST Act. Means actually CGST Act, that's what they meant to say. And support your answer by giving brief reasons. Okay. So this whole question was on composition levy. Composition scheme will not be an optional scheme. You know it is incorrect. Composition scheme is an optional scheme because section 10's wording says that may. Okay, registered person may. So you know it's an optional scheme. So very straightforward. The second, taxable person having same PAN can opt to pay tax under composition scheme by seeking separate registration for branches. Mind you, my dear friends, it's not possible. Correct? So it is incorrect because you know we had multiple times discussed this, that I have suppose one branch in Maharashtra, okay, another branch I have in Rajasthan. Correct? One in Maharashtra, one in Rajasthan. Can it happen that I am opting for composition scheme in Maharashtra and normal levy in Rajasthan? No, it's not possible. It is given in proviso to section 10 subsection 2. Correct? So second is also incorrect. I hope all of you would have got it. Third, taxable person will be eligible to opt for composition scheme only for 1 out of 3 or more business verticals. No, it's not like that. Actually, if you are under composition scheme, then if you are opting composition scheme for one of your unit, then you have to opt for composition scheme for all the units. Then composition scheme can be availed where taxable person effects interstate supplies. You know it cannot be availed. Correct? It cannot be availed. Further, I would like to tell you, yes, it is given in 10 subsection 2 that you should not be engaged in interstate supply. So that was also incorrect. And fifth, composition tax can be collected from customers. Absolutely incorrect. You cannot collect composition tax from customers. You have to pay it from your pocket at the prescribed percentages of aggregate turnover, isn't it? So all 5 statements were incorrect. I have drafted the solution here. Check that. If you need this solution set, you please WhatsApp me. I'll send you. Of course, some of you already WhatsApp me, but due to my schedule, I could not send you. Now, post today's session, by today's day end, I will make sure that these solutions are sent to those who ask for the same. Don't worry about that. And of course, they will be incorporated in the upcoming notes. And of course, they will be also incorporated in the taxman book, that is the cracker. At the end of the cracker, we have provided this question paper plus solutions, of course. Next was again a very simple question. So mind you, my dear friends, from this A, B, C, D, 15 marks was straightforward. See the D question, you will find it. It is straightforward. Rather, it's one of the question which was asked in CA final and which we had already covered in our main batch also and revision batch also. Question is like this. It is on advance ruling. Ram Bharose intends to start business of supply and selling of specified goods in Delhi as proprietor. However, he is not able to determine, because of complexity of provisions of CGST Act, as to classification of goods proposed to be supplied by him, okay, and place of supply. Now tell me, on which of the questions you can apply for advance ruling? You can apply for advance ruling on multiple questions, isn't it? But that questions don't have place of supply as the category. Okay, logic is also there that place of supply, okay, this being a destination based tax, and place of supply cannot be determined, you know, by particular state government, and advance ruling is given by state government's authority. Correct? So place of supply matters cannot be decided. So classification, yes. Place of supply, no. Okay, he therefore approaches tax advisor who advised him to get first registered under CGST Act and thereafter apply for advance ruling. In respect of these issues, as the advance ruling would bring certainty and transparency and would also avoid litigation later. That's fine. In this backdrop and information given, you are required to advise with respect to following. Whether he needs to get himself registered. No. Because definition of applicant in advance ruling says that applicant can be any registered person or any person who is desirous of obtaining registration, isn't it? So he is supposed to start business, he is desirous of obtaining registration in GST, that is sufficient to apply for advance ruling. So the what you can say, opinion or contention of the legal personnel is not correct. Can advance ruling be obtained to determine classification of goods? As I told you, yes. But for place of supply, no. Check. Answers are given here. Correct? So whatever we discussed is given here in detail along with section numbers. Okay? Applicant is defined in 95 section clause C, and questions on which ruling can be sought is defined or given in 97 subsection 2. Okay, are you following it till now? I am sure at least 2 out of 4 questions you have got absolutely correct. Yes or no? Please let me know. Those who are following this video from starting, please let me know that how much do you think you would have scored out of this 20 marks? Because this question 1 was compulsory question, hence I am asking you. Yes? Tell me, till the time I have some water, please tell me. And do share this video with your friends also who might want to evaluate themselves for the exam which they have given or for the upcoming exam. If you are preparing for your June 21 or December 21, recommended is you first study, solve the paper and then try to evaluate yourself. Yes, Rutuja correct. 2 questions were straightforward. In my opinion, 3 were straightforward. First also, ITC's question was straightforward. Advance ruling was straightforward. And correct, incorrect was also straightforward. Okay, good. No need to delete the comment. It was your opinion 2. For me, it was 3. So it can vary. Chalo. Next. Second was again industry specific analysis. In 2A, it was again about industry specific analysis. It was about passenger transportation services. Okay. What you had to do was, again you had to compute value of taxable supply and GST liability. Okay, what I thought is in this question, they have not said whether the figures are inclusive of GST or exclusive of GST. So you can assume whatever you want. I have assumed that they are inclusive of GST. So whatever figure I got was equal to 100 plus 5. Why 5? Because 5 is the rate of GST, 5% is the rate of GST. So I got answer as 1 crore 5 lakh. So 1 crore 5 lakh I have taken as 105. So 100 will be what? So that will be the value, that is 1 crore will be the value, and on that GST will be 5 lakhs. Got the point? Let's see now in detail that which service is exempted and which service is taxable with respect to passenger transportation. So by national waterways, okay, by national waterways is exempt. This exemption is given in entry number 17 of notification 12 by 2017. Air conditioned state carriages, because it is air conditioned state carriage, it will be taxable. Contract carriages, usually contract carriages is exempt, but contract carriage for tourism purposes taxable. Check. So we have taxed it. Then from Mumbai to Chennai port in a vessel, and such services not for tourism purpose, inland waterways is exempt. So again dash. Then in a metered cab like those used in Mumbai, exempt. But radio taxis is taxable. And in air conditioned contract carriages, normal contract carriages would have been exempt, but air conditioned contract carriages are taxable. Okay, so that's what I say, that once you should go through this exemption notification, things are very logical and scoring as well. So check, your answer should have been 1 crore 5 lakhs as total value of taxable service including GST at 5%. So assessable value would have been 1 crore. I have shown you the working, and GST is 5 lakh. I have given you all the notes as well. Correct? Shall we go ahead? Yes, no? Then next was a bit procedural question, that is how rectification could be done in statement of outward supplies, GSTR 1. Even if they are saying that GSTR 1 is a return, I would differ. It is not a return, it is a statement of outward supply. Okay, so can you make rectification to this statement of outward supply? Answer is yes, absolutely. Not by filing any separate document, but when you are filing for subsequent months, you can do that rectification. So I have given you the solution for that here. Check. If supplier discovers any error or omission in GSTR 1, he shall rectify the same in the tax period during which such error or omission is noticed. Okay, so for example, of August, it is suppose detected in, of August 19, it is detected in Feb 20. Then in Feb 20, you can rectify the mistake. If the extra amount is payable, pay that along with interest and penalty if any. That is the provision. Maximum time limit, that maximum time limit is 20th of October, correct, of the next year, or actual date of filing annual return, whichever is earlier. So it becomes, in this case, it is within time limit. Check. I have given you detailed solution. Clear, all of you? Next. Oh, yes, next. Fine, let's see. So A question we have done, B we have done. Yes, this whole question 2 was tricky in itself. Okay, C. Okay, C is a very interesting question. Radhe Gobind and company engaged in wholesale business, particularly dealing in product of which supply was exempt from tax under GST. So see, I am a dealer, correct? I am selling such goods which are exempt from GST. What happened is, subsequently tax was imposed on sale of the product with effect from what date? With effect from 1st October 2019. Okay, so I am happily selling my goods for say rupees 100. Just say for rupees 100 I am selling the goods. Okay, right now there is no tax on these goods, but with effect from 1st October 2019 there was tax charged on these goods, GST charged on these goods. Point is, I continued to sell these goods now also for 100 rupees. That is the point. See, Radhe Gobind and company continued to sell the product without making any change in the selling price of product. Okay. Later in the month of March 20, they realized that because of no change in selling price, they had paid higher quantum of tax and therefore decided to file an application for refund claim by stating that there was no change in the price before and after imposition of tax. Means afterwards also I continued to sell for 100 only. So I am going to government and saying, please refund me the tax which I have paid from 1st October onwards till 31st March. Why refund me? Because I have not put the burden on the customer. That's why refund me. So I want to know your opinion. In such case, will refund be given? What do you feel? Yes. In such case, will refund be given? What do you feel? So understand, it was my liability to pay GST, isn't it? So if I don't collect it from end customer, still it continues to be my liability, isn't it? I cannot say that I have not passed on burden, so I will not pay GST. So whatever price I have charged will be deemed to be inclusive of GST, and I will be liable to calculate GST in that reverse way and pay to the government. So contention of claiming refund is absolutely not correct. So he will not be given refund. So that is the solution for this question 2C. Clear? All of you? Yes, no problem even if you have joined late, because anyways, even if this is live session, its recorded version will automatically be uploaded on the same YouTube channel. So afterwards also you may watch it. You may watch it, you may share it, whatever is convenient, whatever you want to do. Okay, done. Shall we go ahead? So you know your basics were tested here actually in this question 2C. Then next, what are you saying, sir, for old syllabus or new? Okay, this one is new syllabus paper. This one is paper of new syllabus. By end of this month we will take discussion of old syllabus paper as well. Correct? We'll surely do that. This is new syllabus. Okay. A show cause notice indicating various discrepancies was issued by proper officer to a registered person. However, registered person, despite opportunity given, failed to give satisfactory explanation and reply relating to shortcomings indicated in show cause notice. Okay, so point is, what can be done now? Okay, in this backdrop, state as per provisions of CGST Act what actions now against the registered person may be taken by proper officer. So of course, when a notice is issued on me and I am not able to give explanation, yes, I'll answer those questions. So whatever you're asking in the live chat, that what do you think about the overall paper? Yes. So I'm first telling you question by question, then I will tell you overall how the paper was, okay, and what is the thought pattern of institute, okay, taking into consideration the overall tax paper. But let's first go and discuss question by question. Yes, so we are on this D question of question 2. Okay, so if as a registered person there is a show cause notice issued on me and I'm not able to prove that why that additional tax should not be collected from me, then of course proper officer can go ahead and demand the additional GST from me along with interest and penalty. And you know that there is specific time limit for that. So see, reference had to be taken to this section 73 and 74. So I have drafted the answer here. Correct? So see, real answer starts here. If registered person is unable to give satisfactory explanation, then proper officer shall determine amount of tax interest and penalty as applicable, due from such person, and issue an order to demand the same. So we had discussed so many times that first comes the show cause notice, after show cause notice comes the order to demand GST. Correct? Then going ahead, question 2A, sub question 1. Again, industry specific, I would say. Destiny Advertising Agency Ahmedabad supplied services to different customers for making booking of advertisement in different media. It provides following details and of the amounts charged there against for the month of January 2020. And they have said that GST on print media is 5% and other cases is 18%. And all amounts are exclusive of GST. Check. Aerial advertising will be a service and it is taxable. Nowhere exemption is given for that. Sale of time slot for advertisement to be broadcast on television. Okay, this is again advertising service. No exemption. Advertisement via banner at public places. Again advertising service. Sale of time slot for advertisement on FM radio, 98 Radio Mirchi, taxable again service. And advertisement in Dainik Bhaskar newspaper and advertisement on cover and back pages of books. These two were print media. So these two will be chargeable to 5% and first 4 will be chargeable to 18%. See, I have shown you the working. Check. See the working, I have shown you. Correct? Shall we go ahead? Got it? Then next one. Next one though was easy. It was based on e-way bill. So in this second question, whether e-way bill was required to be generated, yes or no? Whether e-way bill was required to be generated, answer is absolutely yes, because consignment value in each case exceeded rupees 50,000. What is the meaning of consignment value? Consignment value means, you know, value plus GST. That invoice value basically is consignment value. Okay, so in one case consignment value is 1,18,000. In another case consignment value is 2,36,000. So yes, do issue e-way bill, issue 2 e-way bills, and afterwards if transporter wants, he can consolidate those, because these goods will be transported from a same, what you can say, vehicle, isn't it? So see, I have given you solution for that, detailed solution for that I have given you. Is it clear? Are you getting it? So I don't think there is a need to read the entire solution. Just to tell you synopsis of that question is sufficient. Yes or no? Are you following it? Please let me know. Let's keep it interactive so that I also get whether what I am trying to convey is being conveyed properly. So yes, this question was typical, I would say, for e-way bills. Can I go ahead for the next question? Yes, sir. Okay. Next question was also very typical. It was asking you time limit for issue of show cause notice. Correct? Indirectly it was asking you time limit for issue of show cause notice. Okay. So in given case, the show cause notice was proposed to be issued for some issue which related between 1/7/19 to 31st December 19, that is financial year 1920. So what is the time limit? If you are talking about financial year 1920, then you know time limit for issue of show cause notice where fraud is It is 73. So where fraud is not involved. So where fraud is not involved, you know the order should be issued within 3 years. But show cause notice should be issued 3 months prior, at least 3 months prior to issue of order. That means within 2 years, 9 months you should issue show cause notice. Correct? So within 2 years, 9 months from due date of filing GST return, GST annual return. So GST annual return for 1920 would be filed by 31st December 20 due date. I am talking about due date. 31st December 20. Calculate 3 years from 31st December 20. It will become 31st December 23. 3 months preceding that is 30 September 23. So check whether the notice is issued up to 30 September 23. It is issued on 31st July 23. So is it within time? It is absolutely within time. Correct? So the company was saying that it is time barred. So the company's contention is not correct. Check. So this detailed solution I have given you here. You must have got this correct. Quickly let me know how many of you got this correct in the exam. Those who have given the exam, of course. Chalo, let's go ahead then. So typical question it was. Fourth question now. Okay. Fourth question. So it was from types of assessments. It is about summary assessment. Okay. So when can summary assessment order be made by proper officer under provisions of CGST Act 2017? Okay. And can such an order be requested to be withdrawn? And if yes, then how and before which authority? So here is the detailed solution of that. Okay. Summary assessment can be initiated to protect interest of revenue. That means where GST department loss is going to be there, then in that cases to protect interest of revenue, summary assessment can be issued. Who initiated? Okay. Who can do that? So it can be done with previous permission of additional or joint commissioner. Okay. Of course, when the proper officer has evidence that taxable person has incurred liability to pay tax under the act, and proper officer has sufficient grounds to believe that delay in passing assessment order may adversely affect interest of revenue. That means unnecessarily department will go in loss. To stop that, such type of assessment order can be issued. Okay, and when and how it can be withdrawn, that I have given you here. That is on application filed by taxable person for withdrawal of summary assessment order within 30 days from date of receipt of order, or on his own motion. That is officer on his own motion, where he finds that such order is erroneous and he may instead follow the procedures under 73 or 74, that is of demand and recovery by issue of show cause notice. Okay. So that was one question which was procedural. Question 3A was very interesting question. Okay. See, let me see what answer you have got. I think you may have faltered in doing this question, I think. But if you have got correct, fantastic. Nothing like that. But it's a tricky question. Examine by giving reasons in brief in context of provisions contained under CGST Act as to taxability or otherwise of following independent supply of services. First one, Tejas and Company of Delhi, a tour operator, provided services to Robert, a foreign tourist. So you know there is a tourist company in India which is providing some services to a foreign resident. Okay. And the tour is to be conducted in locations in India. So you have to tell me that whether this will be taxable or not. So where will you go and find the answer for this? What would be your thought process for this? Yes, anyone wants to tell me that for question 3a, subpoint 1 or the first question, which provisions do you think would be applied? Yes. So understand, I'm waiting for your answer. Let's see if you were on the correct track. You are on the correct track. It's okay even if you go incorrect. Disclose it to me. What do you think? Fantastic. It was about section 13. Very good. And subsection 2. Absolutely. Because why section 13? Because one, either supplier or recipient of supply is outside India. Correct? Recipient of supply is outside India. So till 13 you have got correct. Why subsection 2? Because it was not covered anywhere between subsection 3 to subsection 13. So it was 13 subsection 2. That is residual. Correct? Residuary cases. And in this case, okay, what is the place of supply? In this case, understand, see this. As per 13 subsection 2, place of supply of services, except of course where services are specified in subsection 3 to 13, shall be location of recipient of services. So what is the location of recipient of service in this case? Is it available? Absolutely it is available. It is UK. So place of supply is UK and location of supply is in India. Place of supply is UK. So understand, there will be no GST in this case. You will be surprised to know there will be no GST in this case. Check. Okay, very interesting. No GST in this case. So if you would have applied logic that the service is consumed in India, let us charge GST. No, I told you logic works in 95% of the cases, not all the cases. Correct? So this is a supply which is deemed to be given to a recipient who is outside India. So place of supply is outside India. Location of supply is in India. It is export of service. So it is not chargeable to GST. Okay. So it was a very tricky question. Hats off to Institute for putting such question. And really they are trying to test your knowledge and basics. Then next, Miss Purnima acts as team manager for ISL. Again, I would say that this question is from industry specific analysis. So about 17, this is 4 marks. So 19 marks weightage for industry specific analysis. Okay. Miss Purnima acts as team manager for ISL, a recognized sports body. She was contracted by multi-brand retail company to act as manager for tennis tournament organized by them and was paid amount of rupees 5 lakhs. So mind you, when the individual is giving a service as team manager to any recognized sports body, then it is exempt. Okay, but when given to any other body than recognized sports body, like for Indian Premier League, IPL, then it will become taxable. So in short, Purnima's service as a team manager for Indian Sports League would be exempt, but to multi-brand retail company would be taxable. Check. I have given you the solutions here. Clear? Shall we go ahead? Did you understand? It is okay if in exam, of course, you don't write entry numbers. What's important is you just say that the exemption is as per notification number 12 by 2017. Shall we go to next one? Next one was very typical question. It was on time of supply. Okay. Now understand. Is it goods or service for which the time of supply is asked? So in the introductory statement or sentence, it is not given. But if you observe the table, they have said date of completion of service. And it is a forward charge. So as per which section, subsection? So time of supply means 12, 13, 14 of CGST Act. Service means it is 13. And forward charge means it is subsection 2. Correct? So we have done section subsection wise, by the way. So of course you are in a position to understand this. Okay. So you might be feeling that those who are actually only watching this paper's discussion might feel that why I am referring so much to section subsection. But that is how we had studied in the main batch, isn't it? So that's why I could easily refer to it. We had done a section wise index and we had also gone to do a subsection wise index. Correct? So that's why I could refer confidently to that. So it is section 13 subsection 2 of CGST Act, where it is a time of supply of services in case of forward charge mechanism. Correct? See this. Date of completion of services 16/7. Date of invoice is 21/7. That is, invoice is issued within 30 days from date of completion. You know, when invoice is issued within 30 days from date of completion, then time of supply is date of issue of invoice or date of receipt of payment, whichever is earlier. So check. For first, answer would be 21 July. So what government wants to say to you, that when invoice you are issuing in time, then time of supply is the date of issue of invoice. But if you are not issuing invoice in time, then time of supply is date of provision of or completion of service. Okay. In next, are you issuing invoice in time? Again, yes, it is within 30 days. Mind you, if it was banking service, then 30 days would have been replaced by 45 days. You know that. So in next case, also it is issued within time. So it will be 11/9 or 1/9, whichever is earlier. So 1/9 is the answer for second. Check. And third, in third, what is happening is invoice issued within time? First check that. Yes, it is issued within time because completion of service was on 16th September. Invoice is issued on 11th October. Yes, it is within time. So it will be date of issue of invoice or date of receipt of payment. But you can see that one of the payment, multiple payments are done, means whole payment is done in parts. One part of the payment was done on 1st October. So time of supply for part payment will be 1st October and for remaining payment will be 11th October. Check. For part payment it will be 1st October. For remaining payment it has to be 11th October actually. See, here it should be 11th October. Correct. Okay, let's go ahead. Then you have lastly, is it within time? Again, invoice is within time. So time of supply will be this or this, 11/11/19 or 12/11/19, whichever is earlier. So for part payment it will be 11/11/19, and even for remaining part it will be 11/11/19. Check. Clear, all of you? So I think you all should have scored 4 out of 4 in this. There was no problem at all in this question. Next also, you should have scored 4 out of 4. What is that about? It is about calculating value of taxable supply, okay, in case of foreign exchange. Okay, so basically bank, there is a transaction between bank and individual. Okay, bank is selling $450,000 at 75, but Reserve Bank of India reference rate was 76, and rate of exchange declared by CBSE, you know, you should neglect. So take the difference between two, ₹1 for each dollar, such $450,000. So answer is rupees 450,000 should be the value. Check. Correct? The value is rupees 450,000. Is it clear to all of you? Yes, no? It was rule number, of course, 32, sub rule 2. Then next is discuss and explain in brief provisions relating to refund of amount of advance tax deposited by CTP, casual taxable person. So you knew this, that casual taxable person has to deposit advance, GST in advance, correct, at the time of making application for registration, which is 5 days prior to commencement of business. So you have to discuss provisions regarding to that. Check. I have given in detail to you. Okay. Once you have deposited this advance GST, then at the time of closing your business in that particular state, you can apply for refund. Correct? Check those provisions. Here I have given you them. Then question 3E. So I would not say D was straightforward, but you could have framed the answer for D. Okay. E was such a question that only if you specifically knew it, you could have answered. Proper officer under CGST Act can authorize arrest of any person under section 69. State all situations when proper officer can authorize arrest of any person. So this answer is not directly given in section 69, but section 69 will redirect you to section 132, and these are the 4 situations given in section 132 where arrest can be possible under GST. Correct? You can go through that. Then comes question on customs. Very straightforward question. The next one, question 4A, you all should score 6 out of 6 in that without any excuse. Okay? Straightforward question. We had solved 20 such questions in the main batch, minimum 20, where you had to calculate assessable value. Correct? So I don't think there is any need of even discussion for that. See the solution. FOB value, then take designing charges, that will give you subtotal, convert it in rupees, okay, do adjustments of 10(1), you will get FOB value. In FOB value, add 10(2)'s adjustment, that is of transport and insurance, you will get CIF value. That CIF value itself is your assessable value. On that assessable value, charge basic customs duty, charge social welfare surcharge. You will get assessable value for IGST, charge IGST, you will get cost of imported goods, and you check the notes also. Okay, just let me tell you, it is absolutely okay if after FOB you do 10-1. That is okay, even if after FOB you do 10-1, I am absolutely okay with that. Okay, because here what I have done is as per ICAI standard. So you may follow that, you may not have followed that. Both answers will be acceptable. Then question 4B. Specify all those conditions which are required to be satisfied for imposing countervailing duty on subsidized articles. So basically it is what we had discussed, anti-subsidy duty. Okay, as specified in section 9 of Customs Tariff Act. So here are the conditions for charging that anti-subsidy duty. You know that it comes only as per notification. Government can notify certain goods on which those anti-subsidy duty can be charged. But those goods should satisfy these conditions. Okay. So someone was asking me my overall analysis of the paper. So I would first tell you about this 70 marks part. In this 70 marks part, the focus was on industry specific analysis to the extent of 19 marks. So yes, industry specific analysis along with common logic and common sense became important. Correct? One. Secondly, yes, there were typical questions also. That typical questions could be about 30 to 35 marks, like that on composition scheme, show cause notice. Correct? This question of customs. So that 30 to 35 also you should have solved confidently. Correct? The one on valuation in foreign exchange services, such question on show cause notice. Okay, so a student who had fairly studied, correct, from this 70 marks, he should be in a position to score I am saying, not solve, score at least 40 marks. From this 70 I am saying. Correct? Let's see now. Second part 2 of the paper. First question means question 5A, first question of this part 2, question 5A. Okay, it was based on section 69D of Income Tax Act. What has happened is, in this question, you have borrowed on hundi a sum of 25,000 by way of bearer check on 11 September 2019. Okay, this whole amount is deemed as your income as per this section 69D check. And while repaying, there is no issue. You have repaid by account pay check, so there is no problem. Mind you, this was from income tax on specific transactions. There is one topic, income tax on specific transactions. This question was from that particular topic. Then in B question, you had to tell the concept of permanent establishment. Correct? Permanent establishment concept you had to discuss. So see, it's given here, the permanent establishment concept. So it is from international tax basic concepts, or you can say from double taxation avoidance agreement, that is tax treaties topic. Okay, so still it was expected that you do A and B, but mind you, my dear friends, no offense, but C was totally out of the way question. Totally out of the way question, which couldn't be found in module also. Mind you, which couldn't be found in module also. See, in module they have given you types of advance pricing agreements, and they have given you meaning and concept of advance pricing agreement. But how and when an unilateral APAB entered into and converted, means you have entered into unilateral advance pricing agreement, when it can be converted into bilateral advance pricing agreement. This was bit out of the way. To be very honest, I found out its answer, okay, directly in the advanced pricing agreements guidance with FAQs issued by government. In that I could find out its answer. So it was very difficult as a student to solve that question. Okay, now I have given you the ideal answer here, but as a student it was very difficult to solve this question. That is question 5C. So I would really say that yes, institute has started asking some fantastic questions and maybe out of the way also. Okay. Do they have right to do that? Yes, absolutely. Because institute study material is also, for reference only. They can ask you 1-2 questions from here and there also. There is one big comment which I will just read here. Sir, if valuation sum, I had only one mistake. I added insurance and okay, you're talking about valuation of customs, Abhishek. So the valuation of customs question was for 6 marks. You will be getting about 3 to 4 marks for that. So for that one mistake, 2 to 3 marks would be deducted. Clear? That was your doubt. Then, next, what is legislative intent or objective of bringing into existence provisions relating to transfer pricing in relation to international transactions? So in my opinion, it's a simple question. Okay, because when we discuss the basic of transfer pricing, we start with discussing this. Correct? In India, correct profit should be declared. Okay, in foreign transactions. That is the basic intent of having transfer pricing provisions in India in relation to international transactions. So that I have given you here. You can go through the answer for that. Then, see, this one page has been means by mistake it has been repeated. Just cancel that. See, this was page number 9. Again page number 9 has come up. Just cancel that. Go to page 10. Assessing officer can complete assessment of income from international transactions in disregard of order passed by transfer pricing officer by accepting contention of assessee. Again, such a question for which there is endless answer. Okay, the answer is very subjective for this. But usually what is done, that we have put up here. Okay, usually whatever price is given by transfer pricing officer, that cannot be regarded by assessing officer. Usual answer I have written here. Okay, so I have used provisions of section 92CA and given you the answer. Okay. But this DT part was bit unexpected, not asking anything from taxation of companies, not asking anything from taxation of firms, not asking anything from AMT also. So it was bit surprising. Okay, too much focus on international tax. Chalo, let's go ahead. Examine in context of provisions in each of following independent cases and state in brief whether there exists business connection in each of the cases in India so as to bring the income earned in India in previous year, if any, to be taxed in India. So this was relating to section 9. You had to evaluate business connection. Okay. Al Rahim Limited, a company resident in Dubai, had set up liaison office at Mumbai. So, only having liaison office does not mean there is a business connection. What that liaison office does is important. Okay, to receive trade inquiries for customers in India. The work of liaison office is not only restricted for forwarding the trade inquiries to company in Dubai, but also negotiates and enters into contracts on behalf of that non-resident, that is Al Rahim. So can you say that Al Rahim has got business connection in India? The answer is straightforward, yes. because it is given in this explanation 2 to section 9 that business connection will include this thing. Okay. See this. Al-Rahim, it can be said that it has business connection in India. Okay. Second part. John Mueller Inc., a resident company of US, has set up branch office at Delhi for purpose of purchase of various materials which are being used for manufacturing its products. The branch office is engaged in selling the products manufactured by that company and also in providing sales related services to customers in India. That is everything on behalf of this foreign company. Can you say that foreign company has business connection in India? So you can go through this. In this case, it is said that it will not have any business connection in India. Okay, see how, why, check. Has or does not have. It is engaged in selling the products manufactured by John Miller and also in providing sales related services. Let's see what happens. For business connection to be established, the person acting on behalf of non-resident inter alia habitually secures orders in India, mainly or wholly for the non-resident. Check whether orders are secured. Okay, check. What is happening in this case is, in given case, John Mueller Inc., resident company of US, has set up branch office at Delhi, which is inter alia engaged in selling the products manufactured by John Mueller. Okay, so actually what we have presumed is that it is selling the products, means it is securing the orders also. Okay, that's why it is said that it is having business connection in India. That is the point. And lastly, Rajendra, resident in India and based at Noida, is appointed as agent by KOK Inc., a company incorporated in US, for exploring Indian markets. He had not been given authority to accept the orders, but was allowed for canvassing the orders and then communicate the same to the company in US. All the orders were directly received and accepted by company, and after receiving the price value thereof, the delivery of the goods was given directly by company from its outlet outside India. So in short, this Indian branch is not authorized to do all these activities. It is authorized, okay, only to represent to a limited extent on behalf of this foreign company. So it cannot be said that foreign company has business connection in India. See, it can be concluded that does not have any business connection in India. Correct? So this is how the questions were placed. Next, B. If you would have read the B question properly, you would have got the answers. Okay? For this B question, you could have easily got the answers if with bit of patience you would have read the questions. They are on taxation of gifts. So in income tax on specific transactions, in that taxation of gifts we had done, it is based on that. Okay, what they are saying in first one, see, whatever is there, you have to discuss in the hands of recipient. You have to discuss in the hands of recipient whether it is taxable or not. So Nishtha, a member of her father's HUF, transferred house property owned by her to HUF of her father without taking any consideration. Okay, the stamp duty value of the house property so transferred by her on date of transfer is assessed as 15 lakhs. The property so transferred by her was given on rent by HUF. So it is clear cut given in the act that such type of transaction is exempt. See, any sum of money or movable or immovable property received without consideration will not be charged to tax in case of HUF were received from any member thereof. So there is no question of charging income tax in the hands of recipient. Correct? Further, in short, that recipient has got that property free of cost. Still, it cannot be taxed under the head income from other sources. It is specifically exempt. But of course, when it will give that property on rent, then yes, income has to be taxed in the hands of HUF under the head income from house property. I have given you the detailed solution. And next one, again gift. Akshat received 1000 shares as a gift of ATOZ Limited having face value of 10. Neglect face value, okay, from friend. Mind you, friend means non-relative. Okay, so yes, marriage anniversary, neglect the occasion. Only on occasion of marriage is not taxable. Fair market value of gift of shares important. It was 100 per shares. So do 1000 shares into 100. You are getting a value of 1 lakh. That means it exceeds 50,000. So that entire 1 lakh will be chargeable to tax in the hands of Akshat. Further, you know, this car will not be chargeable to tax because car is out of purview of definition of property. Okay, you have no excuse for going incorrect here because we had discussed gifts in detail in the class. Okay, so I have given you its solution here in detail. Next one, it was from the topic of tax planning, management, avoidance, evasion, the concept of form and substance. Okay, so I have given you that here in detail along with the judgments. Next one was, what do you understand by term double taxation? So already in your notebook, when we start unilateral relief and bilateral relief topic, we take this concept of double taxation, isn't it? So here is the answer for that. Source rule, residence rule, how there is double taxation, how that is mitigated, everything is being discussed here. So I think this 6 marks were very straightforward for you, isn't it? This 6 marks were straightforward. Then second last question in this entire paper. Okay, interesting one. What has happened is a foreign company has come to do, a foreign company which is engaged in shooting of films, okay, and production of films. What they do is they come to India, they shoot a particular film, they use Indian locations, that's it, and they go and give this broadcasting rights outside India, sell this broadcasting rights outside India, and to DD2, a channel in India, they give the broadcasting rights. Question is whether the income will deem to arise in India. Okay, and the answer is very straightforward, means given directly in the act in section 9. Section 9's clause D's explanation, the answer is given. Okay, so even if once you would have gone through this, it would have been possible for you to answer it, and even some of you might have answered logically that income is not arising in India, only locations of India are used for shooting. Okay, so you can check this, it is specifically given in that explanation that no such income shall be deemed to arise in India for the non-resident, okay, which is out of operations which are confined to shooting of any film in India. So you cannot tax that income in India. And lastly, it is about, yes, again it is from the topic of planning, management, avoidance, evasion. It is actually the concept, it is based on the concept of application of income versus diversion of income. So even if you would have done short note on application of income versus diversion of income, this case you would have understood. Okay. What happened is, this XYZ Limited had taken over business of sole proprietor. Okay. And this XYZ Limited was supposed to pay rupees 75,000 per annum to wife of sole proprietor. Question was, what is this 75,000 rupees? Is it application of income or is it diversion of income? Okay, that was the question. Correct? So I have given you detailed explanation here. See, if income is diverted before it reaches the assessee, it is deductible from income. Okay. But where income is required to be applied to discharge an obligation after it reaches assessee, it is not deductible. Okay, that is the difference between diversion of income and application of income. So your final income you pay to someone is application. Okay, but income is only reaching to you after particular payment, then that payment is diversion of income. So in this case, it's a compulsory payment which company has to make to sustain their business. So it is a deductible expense. So it will be a diversion of income. See this. Okay, so please go through this paper. A very nice paper asked by Institute. I would say unusual one, but if you would have, see, I always feel that howsoever tough the paper is, okay, if your studies and basics are clear, at least to 80% extent, you can still get above 50 marks. So any student who had substantially studied should have been in a position to get 50 plus. And of course, one more hint is that when paper is bit on a tougher side, the checking is bit on easier side. That I have seen. Correct? So don't worry if you have already given the paper. Okay? And if you are going to give in June 21 or December 21, let's prepare these minute things also. Okay? Fine. So was this session helpful? Please let me know in the comment box. Right now also in the live chat you can let me know. Correct? Thank you very much for viewing it. My contact number is given there. So if you have any further doubts or if you want the solved copy of this paper, kindly WhatsApp me. Okay? Thank you very much. See you. Wishing you all the very best.